Breaking news, 6.99%. The housing market will be unleashed. Welcome back to Seewing Yee. According to the Mortgage News Daily, today, May 15th, 2024, we have a breakthrough. Anytime there's a breakthrough of mortgage rates, like we go down from 8% rate to 7.99, 7.7, then it creates a psychological edge for motivation and inspiration for people to get off the sideline. And then the next increment that, in my opinion, people out there are very predictable. Human behavior is very predictable. They look at the numbers, they look at the breaking points, meaning in this case, the mortgage rate has decreased to from 7.5% a few weeks ago now to 6.99%. Again, we have broke another barrier, the 7% barrier. Just a 1/10 of a basis point decrease from 7% mortgage rate to 6.99. The mere fact that the number 7 becomes a number 6, that in my mind psychologically increase the barrier for motivation. So 6.99% will, I believe, will unleash the market even more. So anyway, this is what's going on. Okay, you look at the mortgage rate back in October of last year, 2023, we're talking 8.03%. So that time, the demand obviously has subsided and inventory has risen accordingly, right? Whenever the mortgage rate is too high, there's more inventory coming to the market. Then from October last year to the rest of the last year, we're talking order over here from 8% decrease to 6.63%. But toward the end of the year, real estate activities and transactions, these are seasonality. Toward the end of the year, for whatever reason, there's not too many transactions. People in the holiday mood, right? They are in the rest period, if you will. We're at the beginning of the spring season, the first spring season every single year. Normally, you see a lot of activities, but this spring 2024 has been one of the lowest in terms of transactions for the spring. So that's very interesting because, again, the mortgage rate have a lot to do with it because during the entire first 5 months of this year, 2020, we have right here 6.92%, that it went down slightly, 6.6% in February of this year. Then going again all the way up here in February 26 to 7.13%. Came down again. It went down to 7.06% back in April, a month ago. Then, since when they talk month of April, the recent increase from 7% all the way up to around 7.45%. And then that was April 29th right now. 2 weeks later, right now, May 13th, you see the rates for the past 2 weeks have decreased from 7.43 all the way down to the psychological barrier of 6.9. What does that mean? Okay, I'm going to share you go over a chart here and share my screen once again. And yes, here the very interesting chart. Okay, I can find it. Here it is. Okay, all right. All right. All right, I'm sharing this again. So here's the chart that we really need to see. Okay, the starting point we have is on 30-year fixed rate mortgage, right? As you can see, the principal interest mortgage payment on a 7% loan for most people, the median price of a home, let's say $400,000, the monthly payment has skyrocketed to an all-time high at $2,232. Basically, you need to make about $100,000 a year in order to afford a median price of a home across the United States. As a result, based on 7% or higher, the number of households that can afford a median price of a home is around 55 million. Now, here's the tricky thing. Now, right now, we're seeing 6.99%. Okay. So we should see the mortgage payment coming down based on 6.99%, according to Mortgage News Daily. I know 6.99% is probably applied to what people with very good credit, 755 will score, 20% down payment on the primary home. That's the typical situation. Now, what if right now 6.99%? Now, what does it take this year, 2024, for the rate to come down another like 50 basis points to down to 6.5%? If the mortgage rate come down 6.5%, who knows? It could happen later this year, perhaps. Maybe the third quarter of 2024, maybe the fourth quarter of 2024. If the rate comes down from 6 to 6.5%, these are another psychological barrier threshold breaking point that will get a lot of people off the sidelines, and the mortgage payment will be $2,100, a couple of $100 below at 7%. So that will unleash how many more buyers? 2.8 million buyers will be unleashed into the market. They could get off the sideline so that we could see more competition. So right now we are at very low inventory, maybe around 3.2 months supply of inventory, still in low inventory environment. We are seeing in many markets, including our market where I lived in for many years in San Francisco Bay Area, where we're still seeing, as we speak, we're still seeing 3 to 5 offers on a per house, on a house that are priced correctly, on a house that in a good location, on a house that is in good condition. They get sold within a couple of weeks. They get multiple offers, 3 to 5 offers. So given the situation, and right now the interest rate has been like 7.5% for the first few months of this year. Imagine if the rate goes down to 6.5%, you unleash almost 3 million more buyers into the marketplace. That'll create a bit more multiple offer situation. Frenzy is going to happen. It's going to be similar to 2021. Of course not. 2021 is a historical year, right? And so it would be amazing historical low interest rate and to create so much buying frenzy. We're not going to ever reach that point, right? But look at this. If the mortgage rate come down to 6%, again, no one can predict the mortgage rate future. No one have a crystal ball, but it could very well happen. 6% could happen. Maybe not this year. Maybe 2025. That will unleash another 5 point. That will lower the mortgage payment from $2,200 to $2,000. That's very significant. A few $100 drop in a mortgage payment on a lower interest rate will unleash minimal buyers. In this case, 60 million U.S. households will be able to afford to buy a house. So they will increase the number of potential buyers to 5.4 million from 7%, which is right now 6.99, to 100 basis point to lower than 6%, maybe 2025. We can have some frenzy, 5.4 more million. I'm not going to go any further, right? There's no way I'm going to predict any reasonable degree of certainty that the mortgage rate will come down to 5.5%. If that would happen, we can have a housing frenzy, will be an unhealthy market. Don't you agree? Come down to 5.5%, will unleash 7.7 more potential million buyers. I do not want to see that because the market will turn upside down, and that's not a good sign. The point is, what I'm trying to make is, whether you are a primary home buyer, whether you are an investor, do not follow the crowd. Do not be what I call it, the herd mentality. The herd mentality is just not good, because the competition will rise. Right now, there's not as much competition right now. There's a lot of deals to be had. So you have the ability to negotiate on good price, whether you're a first-time home buyer or move-up buyer, as a primary buyer. If you can afford it, if you have a long-term investing horizon, who's to say you should buy right now when there's less competition, so you buy at a lower price? you have more negotiation power. And then you heard the term date the rate, marry the house, right? Go ahead. The mortgage rate is temporary. The house is permanent. If you have a long-term horizon, if you can afford to buy a house, please do so before the competition get off the sideline and you'll be competing against multiple buyers and it'll cause home prices to go higher and the frenzy is going to happen. You don't follow the crowd. And easy certain done is all is so much emotional involved in a major home purchase. Investors, like that's what I do, right? I help real estate mom and pop investors to buy cash flow homes. I keep telling you right now is the best time to buy because you have a lot of builders rate buy down, sellers rate buy down the rate to 5.5% or even lower right now on cash flow homes. Some of the markets that I promote in Florida, in Texas, in Alabama, and then in the Midwest. Entry level homes in cash flow at 25% down payment with the buyer incentive and buyer rate buy down. You don't have to wait till later. Again, anyway, so just be prepared. Things are there's a lot of people waiting on the sidelines, and you don't want to compete against all the flood of people just get off the sidelines when the mortgage rate continue to come down. So you have to pull the trigger as soon as possible and just take a contrarian investing approach, right? Wherever the mass goes one way, you go the other way. That's how you get ahead of the game. That's how you get ahead of the crowd. And the winners are those people that have the wherewithal to strike when the iron is hot and not wait for your fellow competitors try to compete against you on still a very limited inventory of houses for the foreseeable future, in my mind. Anyway, so the takeaway is again, you have to understand the market psychology, you have to understand the human behavior. As the mortgage rate continue to come down, people can get off the sidelines. There will be bidding wars, multiple offer situation. You don't want to be involved in those competitive offers in the future. You do it now, and you're not going to regret it. Okay, so that's a takeaway from this video. The mortgage rate is hopefully it'll stay below 7%. We don't know. It could go back up tomorrow above 7%. We don't know. Don't time the market, right? It's time in the market that is more important than timing the market. You're not going to win the real estate long game by trying to time the market. These are fool's gold. I've learned that for over 30 years of investing. All right. Hopefully you got a lot of value from this video. If you have, then of course, please click the like and subscribe button for on my YouTube channel, and also put down your email into my newsletter on my website so you can be a free subscriber for my real estate investing community. So you'll receive ongoing weekly emails on all types of real estate investing opportunities that will come into your email inbox. Okay, thank you so much for watching, and Seewing Yee, and I'll see you on the next video. Have a nice day. Bye-bye.